Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the cryptocurrencies chart. It's the render chart. It's currently in one of our trading areas, one of our support areas. So, a turnaround might be around the corner. Let's take a look at it. Let's go. We are here on our website, dailymarketupdate.com. Here on this website, you can see that we cover different asset classes, including cryptos, also tech stocks. If you want to find out more about that, register. You can do it completely for free. You can read them all. You can get them all. Our website is listed in the description. It's the dailymarketupdate.com page. So check it out, register for free, and you can get access to all of these Elliott Wave updates. Now, let us take a look at the cryptocurrencies section today. We click on render. And the render chart is currently still in a setup. I think we talked about that in the last video already. It's a support area and our perspective was that render is likely still in this correction. So the alternative scenario suggested we might have already bottomed there. I mean, the price is already very deep in the support area. $3.17 acted as support here a couple of times. That's the 78.6 retracement. It's a very, very important Fibonacci retracement level, a very important support level. The current correction is classed as a complex correction, a so-called WXY structure. And in this structure, the Y wave is likely still unfolding. Now, with a probability of 40%, we see the low as already in. So we might have already bottomed, but it's not the preferred interpretation. It would require a break above a certain level to indicate the next rally has begun. So at the moment, we are still in this correction. Markets don't only move in one direction. Markets breathe in, breathe out. So it's that constant rhythm. And at the moment, we are in the pullback phase. The next phase should come soon and will be a third wave. But the market must hold above our red line. So there's with every analysis, you get a key level where the scenario will be invalidated. And that level is the red line, the 43-cent level. Any break below that would be too deep to really be considered part of this corrective pullback. It would likely mean that something more bearish, something more immediately bearish is going on. Again, not preferred, but can definitely happen. So the local trend is still down. So it can make sense to watch this area closely, but we need to see a reaction first to have more confidence that a low has actually formed. As I said, this correction is still unfolding. Support is between $1.81 and $5.43. A break above $6.08 of first signal line is needed to suggest that we're going higher, again with only 40% likelihood right now. But after one more low, that likelihood will likely increase that we are forming a low there. At the moment, one more low is required, or not required, but preferred. And then should we turn around, break above $6.08, that's our first signal that a low is in. Better signal would be a break above $11.82, and then we should see the market move higher, potentially to $15 plus. So $11.82 will be an absolute critical level here. That's the high of the X wave. X is one of these connecting waves in a correction. So as I said, this is seen as a corrective pullback in a wave 2. If you're familiar with Elliott wave, an Elliott wave structure moves in 5 waves. That's a trend. Wave 1 goes in the trend direction. It topped in 2024. Then we had the wave 2, which is in the late stages, hopefully, ideally. And this is the corrective pullback, which corrects the wave 1. And then afterwards, the third wave is normally the strongest rally in such a 5-wave cycle. After the third wave, it's going to get boring, slow. It should be a fourth wave then. And the fourth wave is typically like the last correction before the final move up. And then the larger cycle will be corrected, which would be a bear market or a much larger correction. So that is typically how such an Elliott wave cycle works, which means in the short term, there is an area of opportunity. These boxes essentially give you areas where buyers typically get interested. So far, reaction has been muted, not too impressive. So it's still an area to watch where the reward to risk ratio is very, very attractive, I would say. So that's the update on render. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure you register on our website, dailymarketupdate.com. It's completely for free. You can also check out our Instagram page. It's new. It's called The Market Intel. You can find the link in the description. Here you can find updates, analysis, news. So check it out if you're interested. As I said, it's new. It might add some additional value as well. And I wish you a great day. Thank you very much. Bye-bye.